Okay, Fraser Kelly, welcome back in to the Scottish Property Podcast.
Perfect, thanks for having me back.
Great to see you, man. How's things?
It's great, yeah, it's going really well. Good start to the year.
Excellent. Right, so you've come back to help us with our market update as we do every month. So obviously going through the news and the month of February, all the headlines. So we're going to talk a wee bit about what's going on in the property market, the sales market, rents, all the usual stuff. Making tax digital is a new thing that landlords need to be aware of. And also we're talking about Rightmove, bringing in, integrating AI into their property search journey as well. A little bit about how estate agents are dealing with that too. And also Scotland dominating the top 10 Zoopla housing market stats for places to, for the Scottish property market are really leading in terms of like, you know, when you come to sell your property, they've done they've basically analysed all the different regions in the UK, and out of like, I don't know, a list of 100, like the top 10 are all Scottish.
Yeah. Makes great reading for obviously selling locally.
Aye, so we'll get into that as well. But first of all, obviously, Kelly Residential, I'm seeing your signs everywhere, mate. You're taking over the Glasgow property estate agency market. So what's happening? You going good?
Yeah, no, that's the aim. So we finished our third year last year, and it's been a kind of record year. So started 3 years ago with just myself. Now there's 10 of us, so it's grown really quickly. We've now got 5 agents and 5 back office staff.
Brilliant.
So yeah, going well.
Social media as well, you're pushing that, and obviously you were just saying
social media content, speaking of Connor, at the Scottish Property Podcast Network event in Glasgow a few weeks ago, and he was a bit of catch up and talking about how cool the rest of the content was. It was quite nice.
Yeah, I think that's, I mean, for us, that's one of our main USPs, and obviously we're the self-employed brokerage model, so it's very much about the personal brand, which I know, Nick, you're a big, well, both of you are big advocates of. We're finding that that's helping us grow very quickly, building the personal brands while being behind the Kelly Residential umbrella.
Talking about some of those ideas, I've seen some absolute belters lately, especially from I think Declan as well.
Yeah.
He pushes it out there. So what was the one? Because he was driving along in the car or something like that, then somebody's driving along the car and then he gets hit or something.
The skateboarder kind of goes into the car. So there's a lot of, with the rise of AI, there's a lot of stuff that's coming from America. But the guys are really good because unlike a kind of corporate brand, they've got their own identity, so they can have fun with some of the content and things that might not be content I would do personally. But again, Connor and Declan are really creative, and I think that's the good thing. It lets each agent do the content.
And you give them the kind of like, obviously you operate the self-employed model, so do you give them like sort of free reign sort of thing up to a certain point? Would you ever jump in and say, no, I don't know about that one? Because that effectively that is coming under the Kelly Residential banner.
Our kind of core message is always, as long as it's highlighting the property in a positive sense. So a lot of the content that obviously the guys do is really creative, but ultimately it is showcasing the property in the way it should be showcased. So long as it's, you know, respectful and ultimately draws attention to the property, that's what the guys are trying to do.
You wouldn't get some of your content past them, no way, man. No, yours is pushing it too far.
I think the one I saw was the plane one, like jumping the plane and landed in the 3-bed setting. I was like,
that was funny. Yeah. I think that's the good thing. And again, we follow a lot of pages that are based, you know, in the States and stuff. In the States and Australia tend to lead the way. So
how are they doing these AI videos? Do you know what they're using?
So we've got a very good photographer, Colin Douglas, who I think has done stuff for the podcast before, but he pretty much does all of our property content. So yeah, he's very creative. So we'll usually give him all that then? We'll give him the idea and then he will make it kind of happen.
Ah, right, okay, got you. Nice. You've been playing about stuff as well, have you not? Like
a wee bit, yeah. It's trying to think outside the box with property content, because it's so boring. Like you're in front of a camera, you're showcasing a property, or you're talking about how you can solve someone's pain point. Like it's just the fucking same market and message, and it's like, how do you mix this up and make it like catch people's attention? And
I think that's the thing. You can tell when everyone, now the corporates have started to do the face to camera content, and you know, my name is X, here's this property. So it's now, how can you then elevate the property even further? Yeah, exactly. So
it's all about the hook though, isn't it? It's all about those first
Totally.
2 seconds.
Yeah.
Try to capture people's, because people are so quick with the scroll now.
Yeah, definitely.
I know, we tried to do some ads recently, and it was like, you just kind of like, let's cut the bullshit. Let's say, well, the hook is the pain point, and then let's solve the problem.
Yeah, absolutely.
And they kind of flopped.
Yeah.
But I think it's because we're maybe too professionally done. I think Meta had moved their metrics a little bit, but they flopped. So it's like a bit of hook, a bit of banter, a bit of visual kind of hook originally, I think, is the key to try and make people pay attention for a minute.
And I think it's always test and measure. See the amount of times that you do a video that you think this is going to get really good engagement and it flops, and actually it's the video that you don't think will do that well does really well. It resonates with a particular audience. So
how do you find the local? Because obviously you're like, one of the things about your brands is you're quite, local, independent, sort of high street presence in Newton Mearns, isn't it?
Yep.
So how are you finding the local kind of content, and are you managing to build up a good community engagement there?
So we've specifically invested in non-property specific content because we follow a lot of the kind of gurus, your Gary V's and your Chris Watkins down south and things, where unless someone's actively looking to sell a property, they're probably not going to want to follow an estate agent's page. So it's how do you become that local expert that people want to follow, to find out about the local community and what local fairs are on and what local events are taking place, and highlighting local people within the community. So that's kind of our aim, to keep growing that so that people hopefully follow us because they want to know what's going on in Newton Mearns and East Renfrewshire, as well as what's going on in property.
Do you find sometimes that you're putting all this work in, and sometimes you're like, right, okay, where's the results? Where's the results? But again, it's like what they say is, it's like you're building it for long term, innit?
Yeah, totally. And we have that heated discussion. So it's myself and my wife Jane and Finlay, my brother, who are the kind of senior people within the business. And obviously everything costs money. So you invest in a good amount of money in filming non-property specific content. It's hard to measure, are we getting more business from that? But you have to trust the process. And as you say, it's test and measure and hoping that it's just that consistent people associating you with that local area.
I had this conversation with Davey Hutton yesterday, actually. So Davey's really ramped up his social media game. So he's employed somebody now, I think full time, to basically follow him about a camera. You'll see the videos everywhere now, and he's getting massive numbers. But obviously he's got a good personality. And I texted him yesterday. I said, brilliant work, by the way, just to give him some encouragement and all that, because he says himself, he says he's not really, I think, probably kept up with the kids in terms of that respect. Do you know what I mean? Yeah. So like, he's like, he's like, that's a lot. Heck, I didn't realise how much work it involved, and he's not really seen the kind of return on it. And I'm like, you're creating digital assets here, hopefully for the long game.
Yeah, I think that's the thing. And it's all kind of, it's obviously, as I say, a big cost. And we look at the guys at Prime, for example, and obviously they're big on investing in everything. But I spoke to Lewis and asked him about, because in an ideal world, we'd love to have someone full time that just does video content as well as grow the social pages. And he says it's the best investment he's ever done, the best staff member they ever hired.
You've got somebody now, haven't you?
Yeah. I think the thing is, you're doing, if you're full time doing your own job. So for us, it's listing properties and servicing clients. You don't have time to necessarily make the content, capture the content, edit the content. You kind of need someone that's their specialism. That specialty
to come up with, It's getting someone that understands a lot about the business and a bit of what you're doing as well, and who you're trying to attract, and your audience, target audience, what you're trying to grow, and buying that vision of growing the brand awareness like you're trying to do.
You missed a trick there. I'm disappointed in you. Samuel Leeds comes up to Scotland. You should have done a collaboration, mate.
He must have come about a year ago. He's still sunning himself in Dubai, is he not?
Oh, is that what it is? Was that an old video?
It must have been that.
I've seen he's really pushing it with the youngest landlord ever or something like that. So
I clicked on the guy's page, and he clicked back about like 4 or 5 months of his page. He's already got like his 3 hotels, and I was like, this guy's already, I don't know if the content was maybe recorded 9 months ago, a year ago, or whatever, but it's obviously just getting edited and published now. It was quite funny. Like, I've seen a few people try to jump on it and capture he's in Scotland talking about Scotland, and there was some of it was okay content as well.
Well, that'll be, he's moved out to Dubai now, so that'll be our next trip, won't it? We'll need to go out there and interview him.
Yeah, we do, mate. We do.
We did say that's one of our goals, is to get, I mean, see, for like, a lot of people hate property education, all the rest of it. Like, that my thoughts on it, there's good, there's bad. I actually think,
and ugly.
I think that I do actually respect what he does, right? Although, you know, I would pay 12 grand for a course or whatever, but he puts out really good content, and he has done consistently for 5 years plus on YouTube, really good educational content and great stuff like, you know, property tours. He goes around with some of his clients and all that, and does like really good YouTube videos. And I just think that hats off to him. I kind of respect the guy.
I think he seems to be doing well where he doesn't want to be everything to everyone. He does a lot of controversial stuff, but he probably knows his audience quite well of this is going to appeal to this audience, and I can't be the property trainer for everyone. And I think that's the key thing. And I know we're going to touch on AI, but with AI coming in so much, everything's going to be very generic. Every estate agent is going to seem very similar. Every property trainer could be very similar. So I think it's really important for you to have your own brand and your own identity.
Do you know the other thing I respect about him as well? He takes people on.
Yeah.
Right, so he calls them out.
I like that. And, he has only done it in the last like couple of years. I think I said that to you before. There's a few of them that would probably grow their market and grow their sales. The property might be only a little bit in the background, but it's, I quite like what I respect is, I think as he's grew, it seems to me like he's just invested into property. Like he's grew the portfolio massively as well at the same time, rather than going, okay, I can make money from teaching, I don't really need to do it. He's actually fucking done what he says he's doing as well.
I think he really pushes it to the edge as well, because remember the chainsaw video, he basically went round to evict a tenant and with a chainsaw and started chainsawing the front door down.
We had one yesterday getting evicted from Sheriff Court, and I thought, do we do something similar? Like, but you're like, it's not my tag audience.
I think some of that's a bit bad taste. I don't think, you know. But anyway, let's get to some market updates and some news.
Some juicy content.
So like, obviously I always start off with a bit of general picture of the general economy and how things are at a macro level. So the inflation figures are good, because annual inflation, the CPI, fell to 3% in January. That was down from 3.4. So it looks like we've really got a handle on the inflation, which is good. So the kind of end of the cost of living crisis, which we heard so much about for the last few years. But on the flip side, the UK unemployment rate has climbed to 5.2%. That's the highest level in 5 years. So higher unemployment, putting more pressure on the Bank of England to cut rates sooner to avoid a recession. So you think, well, that's a negative, surely, high unemployment, but actually quite good for interest rates, because we're talking now for the next rate cut, there's like an 80% chance that they're going to reduce the base rates to kind of level things out.
3.75, is it going down to 3.5 then?
So yeah, I think it's from the current base rate is 3.75%, and there's an 80% chance of a 0.25% cut down to 3.5 in March. That's what all the experts are saying. So positive. Yes.
I think it seems to be quite segmented. There's a lot of, I was hearing the other day that there's over 1 million, I think it's 18 to 25 year olds that are unemployed, so across the UK, which is a huge statistic. And I do wonder if it's your hospitality, your retail, especially with the rates rise in kind of in recent times. Are there more hospitality businesses that are struggling, retail businesses? So actually it's your first time buyers that are really struggling.
Minimum wage as well has gone up. So obviously hospitality sector, these kind of
also as a business owner, like if you're looking at minimum wage being quite expensive, do you really want to hire the 18 and 25 year old with no experience you have to train, or do you hire someone a bit older, a bit more experienced if the minimum wage is still going to be a similar starting point?
And with more things being automated again, it's something that business owners will probably think twice about before hiring a full-time member of staff.
It's interesting you're touching on as well, like the kind of hospitality industry, because I signed up to one of those mail letter for I think it was hotels or stuff that was for sale, but I seen them coming through the last couple of weeks, and it was like businesses for sale, and they all were kind of public houses, B&Bs, hotels. Like you can just see that sector just keep going. I think I heard in the news the other week that was something like one pub in Scotland closed down every week last year.
Fancy making £1,500 for sending a WhatsApp? Let's take a wee break to talk about referring sellers to John and Lewis at Prime Property Auctions. The boys have paid out over £350,000 in referral fees. Myself and Stephen have both done it, and it couldn't be easier.
If you know someone selling a property, the guys will pay you £1,500 or 1% of the sale price, whatever is higher, just for passing their details. Doesn't matter if the seller is already on with an agent or not, as long as you're in direct contact with the seller, just drop the guys a message and they'll do everything from the first call to getting the property sold. If you know someone might be looking to sell or struggling to get the result with their own agent, go to the link in the show notes and send them a message now.
So what we talk about, obviously, with the Bank of England base rate that's not really what we use as an indicator. We always look at the SONIA swap rates, right? And you were part of the team at the Scottish Property Podcast networking events, and obviously Jonathan, our mortgage broker, would always stand up and say, you need to look at the swap rates, what the swap rates are doing, and that's like your crystal ball to see what the mortgage rates are going to be in the future, because that's the kind of interbank lending rates. That's the rates that they lend to each other, and that's the way they price their kind of 5-year fixed rates and all the rest of it. So that's a better indicator. So the current SONIA swap rates as of February 20th, the 2-year swap 3.81% and the 5-year swap 3.84%. The trend is down compared to last month. So last month they were hovering closer to 4.02%. So again, that's positive news. Seems to be like the mortgage lenders are kind of really competing against each other. There are rates out there. I'm talking about the general sales market again. There's rates under 4% now.
Definitely. And I think from speaking with the brokers that we work with, the banks are definitely keen to buy the business now. I think that it's becoming more and more competitive. I think they overestimated how many people are purchasing properties. So actually now they are very much jostling for the business. So there's constantly new reductions in rates that are being updated, and people are taking away arrangement fees. So the kind of products overall seem to be much better for buyers, which is...
You know what's been on the lending side lately?
Yeah, I've not had any refinances coming through the last couple of months, but it was quite interesting when I went to the Glasgow podcast event a few weeks ago. Jonathan, I'm always going to put my head down when he goes to speak, so I'm thinking it's going to be fucking doom and gloom. But he actually was really positive in the last one. I think it was a SONIA swap rate is coming down.
So I mean, it's positive. I don't see any real big negatives there.
We're not going to get the low rates we've ever had before. I don't think they'll ever come back, but that's a nice rate for property investors.
I mean, if you look over the last 2 years, we're in a good place at the moment. How are you finding... we'll get on to the sales market then, obviously. That'll be our next thing. So we're looking at the Registers of Scotland house price data. That's the government sales data of the land registry. And the headlines are Scotland continues to outperform the rest of the UK. While the UK average growth is 2.4%, Scotland is sitting at 4.9% annual growth, with average property price now 191,000. Scotland's 4.9% growth is more than double England's 1.7%. I think it's down in London that property market's taking a real struggle.
Yeah, the southeast as well.
Aye.
It's probably it always seems to have went from London up the way and worked its way up. Do you think it's going to come to us in a couple of years, or
I don't see
it just because it was so inflated with the Russian and the foreign money kind of coming into London?
I think it is supply and demand. I think, and I know we're going to touch on this in a bit, but the supply and demand is still well in favour of sellers. Although there's supposedly meant to be more properties coming on the market. For every property we've got, from your first time buyer property right up to your luxury 4 or 5 bedroom family home, you've easily got minimum probably 30 to 40 inquiries per property.
Are you still finding though that, like, remember everyone was going to closing date, a couple of years ago or last kind of, as things kind of leveled off a little bit in terms of like not as many closing dates?
I would say closing dates can also be a bit of a false metric, because a lot of your kind of high street agents, as soon as there's 2 notes of interest, they'll put it to a closing date. Whereas actually if you've maybe got 2 or 3 interested parties, we'll try and negotiate and get, a closing date level offer without having to necessarily go to a closing date, because there's risks associated with a closing date. If you set it for a week's time and there's 2 other properties that come on the market within that time, you could lose interest from those potential buyers. Whereas if you've got 4 or 5 plus potentially interested parties setting a closing date and then getting as many people booked for that week as you can, that's the way to capture the most attention.
You think closing dates are just a way of estate agents being lazy?
Well, closing dates, I've had it on authority from a solicitor that closing dates were invented in Scotland by solicitors because they wanted to basically draw a line under it. Solicitors don't like negotiating because they just want that best and final offers submitted by a certain time frame. I don't have that as factual authority.
It does make sense when you think about it though,
So it's meant to be...
So if you had your way, would you prefer just to do away with closing dates?
I think there's a place for them, but I don't think it's the silver bullet that everyone thinks should be the case. I think
you hit the nail on the head there. Like if it's like 5 or more people interested, you can set a closing date, you drive as much traffic to it, get the best price, look at all the people's positions, fine. But if you've only got a couple, like it's
exactly
premature than a closing date, isn't it?
You think potentially if you had 2 people that were interested in a property, potentially you could get more than what you could get at a closing date if you just negotiated back and forth?
Yeah. So kind of perfect example, we had a property in Newton Mearns that went on the market on Friday. Someone had missed out on 3 closing dates, so they offered a record price for the street that we sold next door, and it was a good 5-10% above what the record price had already been. Could we have gone to a closing date and got a higher offer? Maybe, but actually, is it best to capture that buyer while they're interested?
That buyer motivated to not go to a closing date.
And I think that's the thing. For psychologically, people always think if you get a good offer early on, maybe there's better offers out there, but also in the same token, you could lose that buyer. And we've had it before where you set a closing date and actually people don't like closing dates. They don't like to feel pressured into making an offer. So actually people withdraw their offers or they see another property in that time frame. So I think estate agents, it's their job to give them the pros and cons of setting a closing date.
Just so people are aware as well when they're dealing with estate agents, I mean, everyone will be different, obviously. But what's your process? If I'm buying a property and I'm keen on offering and you say, right, well, there's somebody else, and you start that kind of negotiation, what are you telling me? Are you saying we've had a higher offer than yours? Like, would you like to increase your offer? How's the process?
So typically if we've got 2 interested parties, we would speak to the clients, first of all, understand what it is that they're actually looking for in terms of a figure, because quite often people are naturally quite old school, where if someone makes an offer of 10% above the home report and it's the first day of viewings, I would typically say to a client, we've got 5 viewings booked in later in the week. However, this is a really strong offer. Would there be a figure in mind that you would have that you'd be happy to take it off the market for? If they are, or sometimes they might say, no, let's let it run its course, and that's completely fine. But if someone says, no, if actually you can get to 12% above home report and there's 2 interested parties, it's then taking that to both parties. If someone can come to that, then great. If they can't, then we carry on. So it's just about having those options. But we would never disclose
the offer
what another person offered, basically, out of fairness.
You would say, like, do you want to offer that we've had an offer, like, it's higher than yours, do you want to offer higher?
Yeah. But typically at that point, and this is when solicitors, and I can understand their point, they don't want to get into a bidding war. So I would, if we've got 3 interested parties, I would usually say we've had 3 strong offers. The clients are happy to accept one of them. This is your chance to make a best and final offer.
Right.
So it's almost like a mini closing date. But the good thing from an estate agent or a seller's point of view is it doesn't have the final part that a closing date has.
It's flexible.
When can it backfire, the closing date? Do you ever set closing dates and you don't get any offers or only get one offer?
We've had it where you've only had one offer, and that's lucky. When I would and that's why there's a risk of if you've only got 2 notes of interest and you set a closing date on the basis of having 2 more viewings booked that week, I would say probably someone that notes interest, you've probably got a 50-50 chance of them making an offer in a week's time. That's why
I don't know what you're finding at the moment in the sales market, but seeing the lettings, it's a nightmare for people, no shows for viewings.
Yep.
I don't know if you notice.
Yeah, I mean, it's the biggest bugbear of our probably job. So when we book a viewing, we send an email confirmation. We also send them a reminder on the day, and then we'll also phone them on the day. And so you've got 4 touch points. See the amount of people that still don't turn up. It's probably 1 in 5.
And there's always that doubt in your mind when you've only got 1 booked in and you're having to travel half an hour to get to view. You're like, can you just pick up the phone?
It has happened. It's happened.
Those 3 flips the last couple of months because the cottages are so near my house as well, and then the stage not get a phone call. I've got somebody wanting to view on a Friday night at 7 o'clock, and I'm like, I'll go. I'm picking my up from Dan's, and I'm away to go and drop her off, or I'm coming back like on nip pass, and as much as it isn't half an hour of the way, it's still fucking annoying. By the time you go in, open the door, put the lights on, check I've waited, and you're waiting there for 15, 20 minutes.
Totally.
Not showed up.
And it does, ultimately it's bad on the client, because they've probably, if they live in the property, they've taken the time to clean it that day, they've taken the time to vacate it, get their family out for an hour. So actually, if you then cancel, it makes us look like idiots, because it looks like we've not pre-qualified them.
I know.
But ultimately, it is just a lack of respect on the owner and the estate agent's time. So it does.
Probably just happen. As well, I don't do viewings anymore, because I was starting like rage texting them and all that.
Where are you?
Yeah. There may or may not be a blacklist of people if they don't turn up for 3 or 4 viewings.
That's right. You get to know the names. So obviously, there's been some regional hotspots identified in this house price data. South Lanarkshire is a standout performer, a massive 10.3 annual increase. North Lanarkshire followed closely at 9.4%. And I keep seeing, like, in various other reports, like satellite towns around, some of Scotland's biggest cities, i.e. Glasgow and Edinburgh, are really performing well. One of them being like Motherwell, close to here actually. But
Motherwell,
I think
not the top performer actually.
That was in the Zoopla report.
Oh yeah,
which we could probably integrate into this section as well. While we're on that,
because I'm sure my hometown was at number like 3 or 4 and like
so Zoopla, going on Zoopla's data, Zoopla's ranked every UK postcode area by its growth potential. So they've taken in a number of indicators to identify the best performing places. The results are staggering. Scottish markets occupy 9 out of the top 10 spots for the entire UK. Motherwell and Glasgow are officially the fastest moving markets in Britain. The top UK wide, so you've got number 1 Motherwell, 2nd Glasgow, 3rd Paisley, 4th Falkirk, 5th Kirkcaldy. So you got to look at what's going on there. Is this because people are just getting squeezed out maybe into like better value?
Yeah,
because we find that with the rental market.
Yeah. I was about to say that. I think it just shows that you're kind of, for example, people back in the day started moving to the south side from the west end of Glasgow because the west end was unaffordable, but now the south side is the west end in terms of prices.
Back up again, yeah.
So a lot of people are now moving to your Castle Milks or your kind of further afield areas, but even they're becoming more and more popular. So I think it's just a sign of, I know Paisley in recent times has been really popular because people are probably outpriced of Glasgow, so they're now moving to Renfrewshire, and it's just a sign that the central hubs are becoming more and more unaffordable for some people.
Kirkcaldy was number 5. There was my hometown, and it's very similar. Dunfermline, I think, had the highest growth last year in Scotland, where I live now, but that's the other side of the Forth Road Bridge, so it's the more commuter town from Edinburgh. Everyone's picked up Edinburgh. They're going to Dunfermline, and now obviously Dunfermline's had this boom. It's like they're just kind of going right along the A92 towards Kirkcaldy. What's the next nearest town? Kirkcaldy, right? We've got transport rail links in it. Let's go there, so it's interesting.
How are you finding actual stock levels within your kind of area?
So I would say we've been very much in a growth phase for the first 3 years. So we're probably not in the same position, but I've heard from speaking with surveyors that your kind of larger corporates are struggling. And I think the kind of best indicator of that is fees. Ultimately, when people are struggling for stock, the fees drop. And we've definitely found that bigger agencies we're competing on fees. Which is a sign of people trying to buy the business.
Mark Shanta was talking about this. So like we've got a wee group chat going, and he posted a photo up the other day, and he says, look at these bastards, they're putting out flyers, 0.5% for estate agency fee.
Yep.
He's like, that's what we're up against. And I'm not going to mention names, obviously. But anyway, good luck, Mark. I know he listens to this. So even if he's doing his dance.
He's just trying to put you off being an estate agent, mate.
I know.
He doesn't want you competing with him.
I think that's the thing, though, with your independent operators like Mark, and we're quite close to where he is and operating the same way. We have to hold our fees because our primary business is the sales side, and also we don't want to be competing at that level.
What sort of service are you going to get for that?
You just have to do volume ultimately, and in order to be able to do do a 0.5 fee. You've got to do volume. And then we always say to potential clients, what kind of service are you going to get? And if someone's willing to drop their fee that quickly, what are they going to do when negotiating with your home? Price, yeah. So yeah,
I really I'm quite strict on fees now.
Yeah,
I'll just like I'm at a point now in my business where right at the start you would people start negotiating. You say right, okay, I'll take it just to get a few numbers. Get a few properties on the board, sort of thing. But now I'm like, because I'm in a position I don't really need it.
Yeah,
just like it's 10% plus VAT.
Yeah,
that's it.
Still pretty good actually for a letting agent as well. Like that does the service you do as well.
Oh, it did annoy me though recently. Another bugbearer. It's happened a couple of times now. I need to rewrite my contract, my terms of business, because somebody brought a property to us, single property landlord, and it was a nice property. You know, it's like $2,000 a month or something like that. It's good commission, and we took it on, helped him get all the compliance, get it up, you know, everything, sorted it out, got a great tenant in place, and it was full management. That's really all we do. We don't really do the let only, find a tenant only. We don't really do that. Do it for certain clients, but we don't advertise it. And then a month passed, and he's like, texts me, says, just to let you know, what's your notice periods, because my dad's going to take over the management for it. And I'm like, fuck it, man. So like, see, you've got to do all that work. And then he's like,
yeah.
And I've only got a month.
You wouldn't have charged for it as well, the compliance. You just went the management.
I was just like, do everything you need. I was down there, helped him out. First time landlord, got him through all the stuff, registrations and that. But it's just the nature of the game. But I'm going to change my terms of business now, so there will be, for people like that, there will be a get out fee. Do you know what I mean? Otherwise, they can just give 30 days notice, and you've just like lost all that.
It's the same in the sales side. So other than your marketing fee and your home report fee, it's no sale, no fee for most businesses out with your purple bricks and Yopas and things like that. And actually we'll find that on occasion we've done everything, you know, right up to the point of completion, and then something happens with the buyer's mortgage or a legal aspect, and it's no fault of your own, but ultimately if they decide no longer to sell, you've maybe been 2-3 months down the drain, but that's just the nature of the industry. We kind of have to do it.
I know it doesn't happen that much, does it, up here?
No, I'd say probably fall through rates, and you know, overall in the UK it's about 60-40, and
down England it's a lot more, right?
As in 60% can fall through. So only 40% complete. In Scotland it is higher because of the system, so I think it's around about 75-80% complete. And then with your kind of self-employed agents or with your smaller agencies, the fall throughs tend to be less because we do a lot more sales progression. But it does happen, and it is a sore one when
just in general business, we're all business owners. Like, we're always looking to see how we can protect our cash flow as well. Like, do you take like deposit or
deposits? Deposits up front. Usually £1,000 plus VAT on it. Some of the fun boys. I just got one cancelled a couple of days ago. He's actually an avid listener of the podcast. He's quite a nice guy. And if I
maybe he'll come back one day.
Well, he's actually moving to Dubai, which is funny enough. I said we'll catch up with him when we're back out in Dubai. But if I can find someone,
this guy had moved to Dubai as well. This guy I'm talking about. Maybe it's the same guy.
Maybe. So if I can fill it, then fine. I can refund the deposit, even though I don't need to. I would prefer to do it, but. There's some people where you'll spend time on calls and we give value and get them on, and then
it's just the nature of it, running the business. You're going to have time wasters. You're going to have people that try and squeeze everything out of you and just take the piss.
Take and then bail out.
Yeah, I think even from a homeowner's perspective though, the fact, and this is a much bigger conversation, but the fact that nobody's legally tied into a purchase until missives conclude, which these days is maybe, 2 days before the actual sale completes, is crazy. The amount of
that
the fact that you're...
I've been waiting on an estate agent kind of taking that non-refundable deposit, like just going and breaking the mold and going, right, we're taking 5% up front. If you can pay it, we'll secure it.
Yeah. Well, this is obviously Prime Property Auctions who sponsor the podcast. Obviously, this is where they do have a good system because they're taking the 10% up front. On the offer as soon as the offer's agreed. So I that's their kind of that plays into their hands, that whole thing.
I mean, it makes sense. I don't think that should be exclusive to auctions. I think buyers should have some sort of tie-in to pay, because ultimately people are out of moving costs. They're maybe changing the kids' schools. It's a massive life event. So for that to all change within a couple of days before they move, it's not fair.
Have you had any nightmares lately?
Yeah, I mean, it happens all in January.
You don't need to mention any specifics, but just a case.
So one case in particular, So one case in particular, property went under offer in October. Everything went through. It was due. They were buying a new build, so it was due to complete at the kind of middle of January. And on the week of completion, the buyers basically AML came back negative. It was a buyer from another country, and they couldn't substantiate their funds. Not to cast any negative thoughts, but why was that not done? By the solicitors weeks ago? Why was that only done on the week of completion? And I think, so from that side of things, the family were due to move into a new build. They were moving the next week. They had moved their kids from schools. So now they're under a real pressure from the new build developers. They might lose their onwards purchase, and we've had to put it back on the market and start again. Yeah. So in that case,
that's hugely stressful for a family under that circumstances.
Totally.
We had a similar with the first flip of those 3 cottages. One of the girls that worked for Callum White actually came out and wanted to buy it for her mum, and it was the kind of day that I had retired my mum as well, officially. And it was her mum's birthday, she's buying this house. She's like, I've got 50% of the cash. Could I take it? And there was another offer, a friend of mine who was really wanting it. I said, you know what? I like the fact you're buying it for your mum. It's quite nice. You're out in Dubai, you're making cool money. Yeah, let's go for it. I'll give you the 10 grand discount on it. Instead of going over, if you can complete on the 6th of December, I think it was, because my bridging was up like a couple of days later, and it was a 12 grand fee. So if you clear that, one of the sales cleared off the bridge, we'll push it on. It didn't go on, so we obviously lost in the 12 grand extra fee on the bridging loan. I was like, oh, fuck it as well. We're not going to complete now in December. Yeah. We'll just get it in January. January kept pushing, into February, and she just pulled out like a few weeks ago. I'm like, you're fucking joking. Like, took less off you, delayed, not paid off our bridge, now got a 12 grand fee, and now paid the bridging loan for another 3 months because of someone saying they were going to do it. But it was a similar thing, checking AML checks and money out in Dubai and stuff like that.
Right, so let's work on rejigging the whole Scottish system then. Basically, we need to get rid of solicitors first then. No, there's good solicitors out there listening to the podcast. No, but I don't know. I look at it from, and again, I don't do sales, right, so I'm not hugely experienced in it, but I look at it from a letting agent's point of view, right, and I'm looking at all the checks we do, right at the start, credit check, wage slips, bank account statements, previous... so employer reference, previous landlord reference, all these things. We even connect to their open bank. We do an open bank connect as well, where it checks the last 6 months bank income, and that gives us like access to a bank account through a system that we use. So it's like vouch referencing. So I don't understand how the AML and all that can be really done back. Could that not be brought forward, like you say, at a point where it's done by the agent at the time where the offer goes in?
It should be. So we have an online AML system, because down south the agents do a lot more than up here in terms of your AML verification, but typically we won't accept an offer until the written offer's through and their decision in principle's through. If their decision in principle, they'll need to also show proof of funds. If they're paying 10% over home report, we would always ask that they can show proof of funds of the deposit and also the 10% over and above, because that needs to be funded by cash. So we have your follow rate. Yeah. So we do a lot of those verifications. So it should be done. But there's no a decision in principle is ultimately a bit of paper that says in theory you could borrow this. So things always happen, but it's just about how you mitigate that risk as much as you can.
Yeah, and you know, Stephen, again, this is no me just picking on you again, but I run this report through AI, ChatGPT, and it pulls out the headlines. And it just keeps pulling out the same headline. I'm sure AI is not that accurate on it. No, but this is coming from the raw data. So the slump, Aberdeen City remains the primary outlier, with prices falling 7.4% annually to an average of 133%. One of these days, mate. One of these days.
One of these days it'll turn on.
We talked about it in last month's, but I do agree. I do absolutely 100% agree that as an investor,
everything's on sale.
As an investor, it makes sense at the moment if you want pure good cash flow and good yielding properties. So not arguing there.
Yeah, I was actually saying this. We had a site visit up in Aberdeen yesterday, and there's 2 flats of mine in the same block. It was one's about 5 or 6 years ago. They were the first purchase I made in Aberdeen. I've had nothing but issues with this roof leak and getting I brought everybody in and said, look, I'll show you the reality of it. Like, these have not been producing income for a year and a half and almost a year. I've had flipping a 17 grand roof repair, and I ended up having to reroute the guttering what the water from the gutter in down through the wall that was been stripped for years, rotten timbers, through my flat and into the 4-inch waste of the toilet, just to go, this is not happening again. But showcasing that. But we're chatting about, and there's quite a few people that came up from the central belt, like, look, I want to have a look at Aberdeen. Like, what is the attraction? And we're looking at flats on like Union Street, the fucking main street in Aberdeen, and there's a flat in a beautiful granite building, stunning. Anybody can go and look it up on ASPC. 50 grand for a 58 square metre 1-bedroom flat. You guys would rent it like that, but you need a little bit of tar up on it. But it's a phenomenal asset for a city centre, like bang on a city centre in a Scottish city. I'm like, such a great asset. Like, surely can't he go any lower than that? I've been saying that for about 2 years.
Yeah. I was actually the closest I've ever been to Aberdeen the other week there. I went snowboarding up in Glenshee.
So did you get lost?
Aye, and I was like, it was all the accents round about that were all kind of from that neck of the woods. And I was like, I might just take a wee drive up just to see what all the fuss is about. But no, it was too nice a day in Glenshee. You see the blue skies and all that.
Oh, it was beautiful. Beautiful. Well, the Aberdeen Scottish Property Podcast Network event is starting again back up. So you've been earmarked as a speaker, mate.
You paying for my flights?
I'm paying for your flights, your travel, accommodation, everything.
And do you find for Aberdeen, the city centre stock seems to be struggling in Glasgow? I would say your kind of city centre flats, especially the ones that have got cladding issues, the factors fees are just so high. So if you're dealing with factors fees and the buildings insurance because of the cladding,
we're probably the opposite. They're not the cladding, they're traditional 120-year-old granite buildings. The single glazing sash and case windows, some of them not got gas in them. So I think that's more the issue on not the cladding, not the factors. The fact that I don't have any factors, and
so they're not factored really.
Not a lot of them are.
Right. Okay.
Some of them are, but there's a huge amount.
Is that going to be an EPC job up there then for these new regulations for the granite buildings?
Yes, I don't see how they're going to get around that. I really don't. That's going to be an issue.
I saw your videos from the tour yesterday, and the plasterer or the painter or something didn't look best pleased when you invaded his job. And they're walking away in the background. There's like 20 people in this room. Poor plasterers in the background trying to do his taping and all that.
I felt really bad, like for the group that came up and joined us, because we did my two flats on Union Street. Then walked up to, remember Gav Burnett that came on the podcast? And his first buy-to-let in Aberdeen was fully dry rot, and he had to strip back to a shell. So he's just bought a portfolio of 6 SA units, like literally about 200 yards up the road, just off Union Street on D Street. Lovely block, entry. It's basically like an apart hotel, and he was promised this occupancy rate at, it was going to be 11 grand income and all this kind of stuff. And on occupancy that he got and he paid a social for, he's pretty much having to bail out 8-9 months later because he's hemorrhaging 3 grand a month on it. He can't afford to invest. Wants his money back, and he can't refinance to the right value. It's a bit of a mess. So I felt bad showing the guys my headache there, but the light in the tunnel was, we're an investor, we take a hit on making assets properly. But then we went up to his one straight at the back end, and was like, just he's looking at it positively, lessons learned and stuff like that.
What was the downfall there then?
I've said this before. I think everyone that punts the SA, unless in a specific location and contractors, Aberdeen's not an SA market. Like there's such an influx of hotels being built when the oil price crashed almost 10 years ago. I get a room for £45 a night with a swimming pool and a breakfast chucked in. What the hell are you going to get but an SA flat up there for? And you've just sold the dream by a sorcerer that says that this, but they're also a management agent, so they took on the management agent at 20% plus VAT, so they can make their money obviously. But and
if you want to know more about the Aberdeen market, go and listen to the last podcast we did with Brian, because that was great. That was like a history of Aberdeen for the first half hour. So and then it was actually one of our best performing videos on YouTube. Nothing to do with the title.
Nothing to do with the title, mate.
You can get 125 grand flats for 50 grand.
Yeah, nothing to do with the title.
Because he texted me, he's like, it's typical negative Nick.
I missed it over the weekend to give the title, give my opinion on the title. Nick fucking jumped in there. 150 grand flat for 50 grand. I was like, of course you would.
That's a good clickbait title.
So it's performing. It's going off the scale on YouTube. So Brian was good as well. He was good value. Brilliant. Right. Okay. So moving on. Onto the rental.
That's the only one negative on this report. We've actually spent like 10 minutes talking about the negativity of Aberdeen.
Onto the rental market then. Obviously I can give you my view on that as well. There is so this is the ONS rental data this month I'm picking out. The rental cool-off is officially here. Okay, it has been for a while. I've been saying it on the podcast. See, a lot of these things are lagging, and they're lagging because they're bringing the data in from a while back.
Yeah.
Whereas that's a good thing about having an estate agent like yourself on, having a letting agent, having an investor.
We can
see it well before
real time,
the actual data comes through. So we've been talking about this for a while.
I suppose that's the positive for listening to the Scottish Property Podcast. You get the data now, not a year later when it comes out.
Aye, but at least we can confirm it with official data.
Yep.
The average monthly rent in Scotland now stands at £1,021. But just this is an interesting one. Put it in historic context. If you're looking at this trend of things levelling off, 2.6% annual inflation rental growth is a massive drop from the record high of 11.7% seen in August 2023.
Yeah.
Do you know what I mean? So just over 2 years, it's gone from 11.
Was that not when inflation was at 10% anyway, 11%?
Aye. Yeah. I mean, inflation was high back then, and everyone.
And then inflation is now at what, 3%? We're now at 2.6 rental growth. So it's in line with inflation.
Is it not also relative because we were leading the way when there was the regulation and the rent caps? We were all of a sudden the top performer. So naturally, the growth is going to be slower because we were at an unsustainable level before anyway. So it's not necessarily an indication that things are dropping. It's just that things are normalising or we're catching up with the growth that everyone agreed wasn't sustainable.
Do you think that's an indication on what we're seeing with the house prices? Like, your 3 years ago data, rents going through the roof, and then all of a sudden we're now seeing this last year.
Yep.
Property prices are now going back. Maybe people are looking at it going, well, it's actually cheaper to buy now rather than rent. And
I think so.
The first-time buyers back into the market.
Do you get many of that folk that are obviously the first-time buyer market? They're like, well, do you ever get comments saying, done the mortgage calculations, we've been to see a mortgage broker and we're able to get a flat in Shawlands for, I don't know what the mortgage payments would be. I don't know, £600 a month. £600 a month or something like that. But probably like £1,200.
Yeah, I think the difficulty is though those people probably don't have a whole lot above their deposit to do.
Aye.
And in areas like Shawlands, but we sold one in Battlefield that went for 24% over home report, and that was only 2 weeks ago. So I think these hotspots, unfortunately for first time buyers or for people that are renting, they've got different mortgage products that now mean that they could maybe only have a 5% deposit or less. Yeah. But they're not going to still get those properties when people are putting 20% above. Yeah, that's really somebody that either has, help from family or they've maybe got a smaller property that they've managed to make a good amount of equity from a 1-bedroom. They're now moving to a bigger 2-bedroom. So yeah, I think there are people that are coming off the rental market onto the to buy something, but they're still struggling to get over and above the home report.
That battlefield area exploded,
it's
isn't it?
Crazy.
You know what I mean?
And again, we speak with Mark a lot because he's based in Muir End. But your south side areas, they're commanding some. So we sold a 2-bedroom that was 300,000 for a 2-bedroom tenement flat. That's competing with a 3-bedroom semi in Newton Mearns. Yeah. So actually, the demand is unbelievable for those types of properties.
What's driving the demand in that area?
I think again, it's people that would have been in the West End typically. So it's people that are, in really well-paying jobs. They've maybe not got family yet. So it's a young professional individual or couples that want to stay in the hustle and bustle, be around the kind of coffee and restaurant scene, but actually they've got a bit of money behind them. So they're probably maybe a second-time buyer before moving to the suburbs for the schools.
Again, that all ties in with the mortgage rates coming down under 4% as well.
People can afford it.
So much more doable.
Yeah. I would say, just touching on the kind of growth over the last couple of years, we'd always say the hardest part sometimes of an estate agent's role is when someone's property sold next door for 20% above the home report, you're then going out and someone's expecting the same result. But actually it's about explaining that was 2 years ago, but now that property was valued at 200 and it sold for 250. Your property is now valued at 240 because of that sale, but you're not going to achieve 20% above, but you're already benefiting from the 20% growth of what's happened. So the outcome's the same, but people just naturally expect that because something sold for 20% before, it will sell for 20% again. And that's where the market's different. There are odd cases like the Battlefield one where things are achieving that level, but over and above the home report, people just don't have as much disposable income as they did. So I would say that's the main difference. Things are still achieving over and above home report, but they're maybe not achieving the same amount as they were in 22.
Because it's very much different. Like as investors, we get it because we always say like, don't really look at the home report, look at the comparables. But your average
Joe's
person,
not looking at that.
They're just going by the neighbour or the home, you know, what somebody said on Facebook or something like that.
Yeah,
you know what I mean?
And that is the thing actually. What Facebook groups, and we got a lot of recommendations in groups. So, but the amount of value that people will place on how much our property's selling for in a particular area, 40 people will comment and say next door sold in 3 days for 25% above home report, and people then expect that to be
everyone's the property expert on Facebook. No, that's really interesting getting those insights there. Just on the rental data, there's no. Scotland has now seen slow rental growth in England. Well, we knew that. Just in terms of us, we've not got that many on at the moment, so we are getting things rented at a decent price, but we do have to sometimes reduce the prices just to get things moving a little bit, because we find there's not as much demand. There's not as many people looking. I think a lot of that is, again, I say it every month, but a lot of that is the reduction in the foreign student market. That seems to have kind of dried up a little bit. They're not giving as many visas out and stuff. The increase,
it's going to have a knock-on effect with that and the amount of student accommodation that's getting built in
increase in student accommodation as well. And then obviously those shifting people into buying their properties as well has had an effect. So lastly, I think on the agenda, no, actually we've still got a couple of things. We better hurry up. We can gloss over this one very quickly because none of us are accountants. So making tax digital. This is one that popped up the other month, and I was like, I'd heard about it because like our accountants have been talking about it a little bit at the networking events, and this is why the events are so good, because you can obviously keep up to date with all this as well.
We probably just glossed over it now because most of our, I suppose, guests and us, we all own properties in limited companies, so it doesn't really affect us. But if you are a personal name landlord,
but in saying that, this is the stat we always get. So like, I think it's like 90% of landlords, only registered landlords, are, it's near the 90s, own one or two properties. Do you know what I mean? So although our circles are more kind of like people who are building the portfolio and all that, there could be plenty of other people listening to this that are sole traders and just have one or two properties or accidental landlords. And that's where this applies. So from the 6th of April 2026, making tax digital becomes mandatory for landlords and sole traders with a combined qualifying income, that's gross rent plus business turnover, of over 50,000. So it means that the shoebox of receipts is legally dead. You must now use HMRC compatible software to keep digital records and report to HMRC 4 times a year. So as if, you know, the single amateur landlords, you know, accidental landlords weren't getting hammered enough. Here's another thing. Obviously,
you're going to get reminded every quarter of to do your tax return or keep your paperwork,
or get an accountant obviously to do it for you, which is further costs again. So again, it's just that whole drive, pushing them out.
It's yet another thing, and we've definitely had more and more people that maybe have one rental property that they maybe once lived in. They'd never planned on it being, maybe it was a bit of a nest egg, but it was never a business. And I think it's just not viable for them. When we've got a couple of buy-to-lets, and when we first started, we almost just assumed that the accountancy costs would be the profit from the first buy-to-let. But if you're doing it at scale, then it's worthwhile. But if someone only has one or two, there's no profit anymore, or there's very minimal profit.
Aye. And obviously the previous way people would do it is, you know, you would have your deadline to do your self-assessment, and it was just putting in a few figures on a form, you know, and literally, I mean, I think a lot of people just made, I'm not, right, okay. Not me, but there was not the transparency there for HMRC, because they were just relying on people filling out the boxes with numbers that obviously they were hoping that were accurate. But now with this link up, so you need to be linked up with a software like Xero to your bank account as well. So they're literally seeing all the rents coming in, they're seeing everything coming in. So there's really no way around it now.
No cash payments for what you're getting workers to do through the bank.
So I mean, obviously it's a good move by HMRC, I guess, but not great for those individual landlords. So something to watch out for if you are a one or two property landlord. You've just, you know, you're doing it on a smaller scale. Lastly, we'll talk about AI and Rightmove's AI integration. So this just came out. Did you see this pop up in your emails? Usually I kind of gloss over any Rightmove marketing emails, but this one kind of took my attention just because I am really, really interested in AI. Rightmove is aggressively integrating AI into property search journey. Standout update is a new Rightmove ChatGPT app. So they've obviously linked up with ChatGPT and allowing users to search the live Rightmove database using natural language. So you can basically have a conversation like maybe you would phone up an estate agent and say, have you got anything with a big garden in this area and all that? You can just literally have that conversation with ChatGPT now and it'll throw up all the results. Beyond ChatGPT, Rightmove is trialling its own conversational search on its website. A tool for buyers and renters allowing them to digitally redecorate listing photos. The search engine now uses AI to scan property descriptions and images for specific features such as, I don't know, if you're looking for a traditional tenement building with a bay window in the West End of Glasgow, then you can just, it's going to throw it up straight away without having to trawl through loads and loads of listings. So it's interesting. When are we going to be out of job, Fraser?
Well, it's interesting timing because so Rightmove for the first time, their profit levels have been the lowest they've been for a number of years. And actually, when they announced that they were going to integrate with AI last year, their share prices plummeted. I'm assuming because the amount of investment is going to be less profitable. But actually, this morning I was reading that Rightmove for the first time again in years are going to go out of, or predicted to go out of the FTSE top 100 companies.
Right.
So actually there's a bit of a backlash for them integrating with AI. And I think for a long time, they wanted to stand against it because if people can use ChatGPT to find properties, why do they need Rightmove?
Yeah.
I still think there's quite a long way to go because people are so conditioned for searching for a property, looking for a 3-bedroom house in a certain area or even a certain postcode. And Rightmove is a good website. I think in terms of the amount of inquiries for us, it accounts for about 96% of
the traffic
portal inquiries. So in comparison to Zoopla and On the Market, they've completely dominated it. I think it will take a long time for people to move to knowing how to get the best results out of ChatGPT, kind of prompt engineering, because even us, we use it as a business, but we still don't do the best prompts to get the best results.
I use it to basically prompt me for prompts. Do you know what I mean? I say, give me the prompt for, the
best results for this.
But and that's someone that uses it as a business, but for your kind of Joe Public person,
they're still using it as a Google search.
Rightmove's very easy to use. If you're looking for a 3 or 4 bedroom property in a certain area, it's very well set up. So actually, I don't think there'll be as quick an adoption of people wanting to use voice kind of, or specific inquiries. It sounds great, but there'll always be, if I was looking at a property and I was looking at a 4-bedroom family home in a certain area of Newton Mearns, I'd probably still check Rightmove just to make sure I haven't missed anything. So it'll take a while.
In terms of actually the estate agent's role as well, I think Rightmove is probably more at threat through AI than independent local estate agency business where, it's very much a people business, isn't it? People are still going to want that personal contact. I mean, a good example actually is my sister, right? So my sister who stays up in Inverness, she's been an estate agent all her life, like local estate agent in the high street. And, obviously 15 years ago when everybody starts using the internet to book their holidays, I'm like, what are you going to do? Like, you're not going to have you're not going to have a job, and she's still there to this day. She's the manager of Hayes in Inverness. If you want to go and book a holiday up in Inverness, go and see her. Her name's Nadia. But she is thriving up there. Her shop's thriving. And still loads of people walk in off the street to book their holidays. And you would think, surely that's dead. But it's not. So I think there's life in this yet, Fraser.
I think again, it'll probably just act as another differentiator where you either, the more AI comes in, I think and hope that people want to trust people. From that perspective, I think you probably will have a product that if you want to list a property and it's purely just putting it on ChatGPT, people can find it, you do the viewings yourself, and it's a self-service option. I think that will probably come. And that's what Purple Bricks were trying to do and nearly did it. But I think at the other end, for people that want that service, that kind of concierge service where you've got one point of contact who you know you're always going to deal with, that genuinely learns about your property and sells it in the best way. I always think there'll be a place for that. I just think you'll have that middle ground where it'll be cut out. So if you've got your kind of high street corporate agents where you do your own viewings anyway, all they're doing is putting it on their website and on the portals, I think that maybe has a time limit. But I think you've got a premium service at the top where you might pay a bit more for it, but you've genuinely got an expert salesperson that knows the area help you with that process, or you've got a cost-led self-service option. I think that's how it'll go.
Yeah. Although,
So it's interesting to see how it's going to go for sourcers, because there's quite a lot of sourcers trying to race towards building AI.
Yeah, we got an email in today actually. Justin sent us a guy who's trying to develop a system where it basically it'll scan every property portal out there and it'll break down the numbers to your criteria, bring you all the results and all that.
You can see
them. It's like a scraping thing that basically constantly, and it'll deliver you all the numbers broken down.
There's quite a few people out there that are like local as well that are trying to build it and booking that race to the thing. But Rightmove coming in and doing that, does that then scupper their plans? Because you can almost just go into like the Rightmove chat GPT invitation.
Give me something and I say that's an 8% yield. That'll be an add-on eventually, probably.
We get approached every day by AI companies of how they can deliver X amount of valuations, and I think the thing is the one thing that I don't think they'll ever be able to do is that human element of someone physically coming into your house, and actually it's that trust of someone coming in, they know the market, they know your property, they take the time to learn about your situation, and they genuinely provide a solution that will help. I think that's the last thing that hopefully will go. And all of the AI functions, you'll get more and more faceless pages that will come on your kind of landing pages, but people, especially if it's a sourcing perspective and it's distressed sellers, people will want to know the person that's coming out to see them and know that that is a credible person. They want to be able to check them up and make sure it is a legitimate business. Again, so I think the trust factor as AI comes in will be even more. So I think it's so important to have that personal brand and not just a faceless corporation. I think
although it would be useful to get a robot to jump in a self-driving car and go and do a viewing for these blacklisted people that don't turn up. Do you know what I mean? That could be good. But obviously, like you say, you're never going to... there's not going to be personality behind a robot or an AI system.
You were snowboarding when I had to come in at Glasgow and cover it, and my talk was all about personal brand and how AI is kind of, like a lot of people are kind of using AI to generate their content, and it's becoming a bit generic. And I was talking about personal brand and how that's going to just be more powerful because people are going to go and look at AI, see so much AI content, and then they won't know what to fucking trust in, and then they'll just start trusting the people that's already built a personal brand, going, I've actually followed Nick Fraser.
This is why you need to get your face on video for anybody who's still not doing that. I mean, most people...
I think it's running out of time for them as well. A lot of people that are not doing that, it's run out of time.
I see there are good young people coming through that are doing it, and I pick up the phone and I'm like, hats off to you, because you're not that experienced, but you come across good. You don't need to, you just need to build a wee bit of relationship with them and just a bit of personal connection.
Totally. And I think that's the reason that we've been lucky to kind of grow so quickly is because we did put ourselves out there in social media, and you don't have to necessarily be the most experienced. You could be an estate agent that's been in the game for 30 years plus, but if nobody knows that you do what you do, then how are people going to contact you? Whereas if you're front and centre in the local community on social media, people will say, well, Fraser, that's who to go to. And actually on your local groups, a lot of people don't recommend Kelly Residential. They say you need to speak to Fraser, Finlay, Connor, Declan, because it's that individual as opposed to the business. That's where I think you can very quickly catch up with someone that's been in the business 10 times longer than you by building that personal brand.
Yeah, absolutely.
Brilliant. Well, we've talked for over an hour now about the market update, and thanks, Fraser, for making it a little bit more conversational, and it's been a good conversation.
Yeah, thank you for having me.
Where can people reach out?
So kellyresidential.co.uk, or I'd say the best thing would be my personal page. So Fraser Kelly, Kelly Residential. Always happy to have a chat, even if you're thinking of selling, or if you're thinking about self-employed estate agency. The team's fast growing, so we're always keen to speak to anyone that's considering a career.
Nice. Thank you very much.
Thanks again. Cheers.